Hey, this is Brant from TradeGuild.net. It's the 6th of November, and we are looking at some post-election analysis. I have the SPY up on the screen, which is the ETF for the S&P 500. So if you don't want to buy all 500 S&P stocks, you can buy this SPY and get relatively the same performance. I'm going to just take out a little marker here, and I'm going to show you over here is Election Tuesday. And you can see a couple things that have happened. Number one, we've seen a little bit of a base form or some consolidation in this area. This red line over here is resistance. That's an area where we expect to see sellers. And on Tuesday, we saw a breakout above that resistance. We closed above that resistance over here and on increasing volume, as you can see right in this area. By the way, I'm working outside, so you're going to hear a little bit of this kind of stuff, birds and all that, but it's a beautiful day out here in Florida. One of the things that's been occurring in this consolidation, we're seeing some green spikes in volume like here and over here and over here, and all these are indicative of possible accumulation, buyers stepping in and buying at these prices, looking for higher prices in the future. I think to a large degree an Obama win was priced in. The market hates uncertainty, and a win for Obama looked pretty certain, so I think it was priced in. We got that breakout on this day, and I think what happened probably was the sellers used that breakout and that move up to unload their positions. So it's called selling into strength, and that's something we see quite often. But when we see failed breakouts like this, and this is a failed breakout at this point, typically they will reverse very quickly to the downside, and as of right now, from the closing prices of Tuesday, we're down almost 10% in the last 2 days on the S&P. One of the things that needed to happen for money to flow back into this market was for volatility to die down, and we're going to take a look at some Bollinger Bands over here. You can see, let me pull out the marker again, you can see how wide these bands were in this area, and you can see now how they've narrowed down. This is showing us that volatility in the market has died down. I think what has driven a lot of this decline is the volatility. People are not happy with the way the market's been acting. You can see a lot of volume over here, a lot of sellers. So I think people have been calling their mutual funds and their hedge funds and saying, I want my money out of the market. Redemptions, which forces the funds to liquidate their assets, which means they're selling stock on the open market. So you have more supply than demand, and prices fall. So that's what we've been seeing. But now that the volatility is dying down a little bit, it makes it a little bit easier for money to come back into the market. And I think maybe that's a little bit of what we saw on Tuesday. This next indicator is something I just kind of developed down here. We're looking at this rainbow type of indicator, and these are different lengths of the MACD indicator, and I call it my MACD heat map. And basically the idea is when it's down below this zero line, as it is over here, we're looking at a down market, and you either want to be selling short or you want to be out of the market. You don't want to be a buyer. Typically when I see this red come into play, and I see the second one moving up like this, I want to be closing out my short positions. When it's blue over here or green, this is where I want to be a buyer. So above this zero line, I want to be a buyer. When I start to see yellow, that means kind of just hold your position. Red means start taking your profits and clearing out. So on a daily chart, we're seeing some encouraging action. And one of the things that I said that I thought needed to happen for this market to turn around was for this trend channel. This is a indicator I developed too. It's called trend channel, and basically it's looking at the average volatility in the market, the average price range, and when we see something that's out of the average, we can say, well, maybe there's a change in trend coming. So in this case, when we have a downtrend, this upper blue line is our stop out level on a close. So when the market's going down like this, we want to be short, selling the market short, and then when we see a breakout above that blue line, then we want to close that short position and maybe consider going long. So if we take a closer look, we can see on Tuesday over here we did get that breakout above that that blue line, and subsequently we've fallen back. This could be a pullback we're going to see, or it could be something more serious. But as of now, it looks like, in my opinion, that the downtrend is neutralized and we're at least in a lateral trend, a sideways trend, which is not a great market to make money in, but it's better than this downtrend that we've been experiencing. Now, as far as our reasons to have maybe sold on Tuesday, this is my 3C indicator. It's a proprietary indicator that I wrote, and it measures accumulation and distribution. What you look for is divergences between the yellow indicator and green price, meaning as price is making newer lows down here, in a healthy downtrend, this yellow indicator would be making new lows. The fact that price is making new lows or equal lows, and this indicator is moving up, showed that there's some accumulation, there's buyers in the market, and subsequently we saw a nice little rally from that. But on Tuesday, on Election Tuesday, you can see we're making higher highs in price. This is a breakout, but this indicator, as you can see, is moving down. So what this shows us is sellers are active, and that's kind of an idea or an Wall Street saying sell into strength, and I think that's what happened because there's willing buyers out there and the sellers are taking advantage of that to sell at higher prices. Looking at the same indicator but on a 30-minute time frame, you can see also we had the same kind of effect. Here's that positive divergence at the bottom, which shows us accumulation. We get the subsequent rally, and as we're making higher highs, we have a nice uptrend. The indicator over here is moving down, indicating as price was moving up, the professionals were selling into strength, and they were selling into weaker hands, which would be the retail crowd. Right now we have a leading divergence to the downside, so that's kind of a little bit of a negative aspect, but nothing goes straight up, nothing goes straight down, and we'll talk about that a little bit more in just a second. If we run back to our heat map, and let me pull that up. This is that MACD heat map I was talking about. Another indication that we should have been a seller on Tuesday. Remember what I told you. When we have blue and green, it's safe to be a buyer. So in this area, we want to be buyers. We want to ride this price up. And when we see yellow, we want to hold. We don't want to be buyers anymore. Just hold that position. And when we see red, we want to start liquidating the second red hill that's a little bit lower. We want to actually be out of the position, so selling out. So right up here, we got a signal from this MACD heat map that we should be sellers. And we see the blue and the green below the zero line, indicating, of course, that we're in a downtrend, a down market, and these are safe times to be shorting in general on a longer term time frame of 1 hour. So this isn't for day traders, it's more swing traders. If we go ahead and jump back to my 3C indicator that shows accumulation and distribution, and we're going to take a look at a 30-minute chart. Nice positive divergence, price moves up. You see how we're making higher highs here. This is good. This is telling us the trend is intact, the uptrend is intact. But then when we make the breakout and the highest high, we're moving down over here in the indicator. So this is again showing us sellers active in the market or distribution on a short-term time scale, because we're looking at a half an hour. Over the last 2 days, the market is down almost 10% as of right now. So this indicator is one of the few indicators that I think is leading. Most indicators are lagging indicators. This is a leading indicator. It's an indicator that I wrote using Telechart. I've actually received some awards for it and been published for it. But if you're interested in checking it out, then go ahead and go to my website and click on a link to Warden or Telechart. Sign up and send me an email, and I'll help you get set up with this indicator. And this is a setup that I use. It's actually a trading screen or trading setup. I'll explain it in a little more detail a little bit later.